All right, let's dive into Baidu's latest earnings call for Q2 2025. Now, on the surface, the numbers look interesting, but trust me, what's happening underneath is a massive company-defining pivot to AI. We're going to unpack exactly what that means and what the market's really thinking.
So let's start with the good news, right? The headline beat. Non-GAAP EPS, so what they earned per share, actually came in 1.9% ahead of what the analysts were expecting. That usually tells you they're managing their costs well, they're running a tight ship.
But, and this is a big but, look at the other side of the coin. Revenue. It actually missed what Wall Street was looking for, just slightly, but it's also down 4% from last year. And right there, that's the tension. You've got an earnings beat and a revenue miss. That tells you the story is way more complicated than just one number.
So here's how we're going to break it all down for you. We'll start with the results, look at the big shift in their business, follow the money into their AI investments, check in on their self-driving car unit, Apollo Go, and then we'll wrap it up with our official rating.
Okay, first up, the results snapshot. And really, this whole quarter can be described as a tale of two businesses.
Okay, so look at these numbers. Total revenue, down 4%. Core revenue, down 2%. But then, bam, the non-GAAP EPS beats by almost 2%. And then you see it, that huge negative number for free cash flow, minus 4.7 billion RMB. That's a ton of cash going out the door. The big question is why, and we're about to find out.
All right, this next part is really the core of the whole story. We're calling it the Great Mix Shift, because what's happening at Baidu isn't just a slow quarter. It's a fundamental structural change to their entire business model.
And this slide just lays it out perfectly. Look at the left, the traditional online marketing, their bread and butter for years. It's down a whopping 15% year over year. But on the right, the non-online business, which is basically their AI stuff, is exploding, up 34%. It actually topped 10 billion RMB for the first time ever. You just can't get a clearer picture of a pivot than that.
So you might be asking, what exactly is that non-online revenue? Well, here's the breakdown. The lion's share, 65% of it, is their AI Cloud business, and that division alone grew an impressive 27%. So yeah, AI Cloud is absolutely the engine driving this whole transformation.
And that drop in ad revenue, it's not just a weak economy, it's competition. As this analyst from Third Bridge points out, you've got these absolute juggernauts like Xiaohongshu and Douyin, China's version of TikTok, and they are eating into Baidu's advertising turf. It's a huge headwind.
Okay, so this brings us back to that huge cash burn. It's all about investing in the AI future. You see, that negative number wasn't a mistake or a sign of trouble. It was a choice, a very, very expensive choice.
Let's just put this number up again so it sinks in. Negative 4.7 billion RMB. When a company burns through that much cash in a single quarter, you have to ask one very important question. Where is all that money going? Because it's not just vanishing into thin air. They are plowing it back into the business, big time.
And here's your answer. They're going all in on AI. I mean, look at this. They're overhauling their main search product. 64% of mobile searches now have AI answers. They're buying up a ton of GPUs for the infrastructure. They're pouring money into their foundational model, Ernie, and it's already creating new revenue streams. Products like digital humans grew 55% just from last quarter. That's where the money's going.
But it's not just about cloud and search. Baidu has another huge AI bet, and it's their autonomous driving division, Apollo Go. And this quarter, they started making some really interesting moves on the world stage. Just look at this growth. Fully driverless rides, up 148% from last year. That is just incredible momentum. It was their best quarter in 2 years. So things are definitely accelerating here.
So how are they going to make money off this? Well, here's the genius part. Their strategy is to go global, but they're not doing it by themselves. They're partnering with Uber and Lyft. Think about it. They can just plug their robotaxis into these massive existing networks in Asia, the Middle East, even Europe. It's an asset-light way to expand fast. And the key is they've already figured out how to make a tiny profit on each ride in China where the fares are low. Imagine what they can do in higher fare markets like Germany or the UK. That's the gambit.
Okay, so let's pull all of this together. It's time for the next call, our official rating and what we think is coming next for Baidu.
So here's the whole investment thesis in 4 simple steps. 1, you've got the problem. Their main ad business is shrinking. 2, you've got the pivot. Their AI business is booming but costs a ton of money.
3, you have the wild card, Apollo Go, which has massive potential but isn't profitable yet. And that brings us to the verdict. The AI plan is solid, but there's a lot of risk in the short term, and it's going to hurt their profit margins.
So if you're an investor or just watching Baidu, these are the things you absolutely have to keep an eye on. How are they going to make money from AI search? Do these Uber and Lyft partnerships actually take off? Can the AI cloud keep growing this fast? Does the old ad business ever recover? These are the questions that will drive the stock from here.
All right, so after weighing all of that, our official rating is market perform. Look, the long-term AI strategy is exciting, there's no doubt about it. But right now, the problems in their main ad business and the sheer cost of this transition are just too big to ignore. So we're neutral until we see a clearer road to making real money from all this.
And it looks like we're not alone in being cautious. This chart says it all, really. Over the last year, the broader China Tech ETF is up almost 50%, while Baidu is actually down. That huge gap shows you just how hesitant investors are about this whole pivot.
Which brings us to the final, multi-billion-dollar question. Baidu is betting the entire company on this AI transformation. Is it going to work? Can they successfully shed their skin as an old-school search engine and truly become a global AI powerhouse? That's what everyone is waiting to find out.
And that's our breakdown of Baidu's quarter. As always, remember, this is not financial advice.